Hey everyone, welcome. Welcome, guys. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. Hello, everyone. Welcome. Guys, we'll get started shortly. This evening is our stocks, options, and ETFs class. Stocks, options, and ETFs. We'll get started shortly. Stocks, options, and ETFs. We'll get started shortly. Welcome, everyone. Welcome, everyone. Welcome. All right, guys. As you guys know, on Thursdays, we go over stocks, options, and ETFs. See, we've got some new faces here. So welcome, guys. Arlene, welcome. Hey, Dennis, welcome. Hey, Bill, welcome. Solomon, welcome. Welcome, guys. Let's go ahead and get started here. I want to go over the markets, and then we'll open up the floor for any questions. Hey, Regina. Well, welcome. All right, guys. This should not be a surprise to any of us, right? You guys should see my screen here. All right, this is the Dow. All right, this is the Dow. 1 second here. All right. Okay, so this is the Dow, and we've been talking about this Christmas rally, right? Which started in October. All right. So last month. All right. So let's go through that. All right. Let's go through that. So if you guys look here, right, we've got right here. Here is where the market closed today, and here's the all-time highs. All right. So here is where our Christmas rally started. All right. Right here. All right. Right on It's a crooked line here, but right on this candle right here. So this was last month's price action. And then this is so October, November, and right here, this candle right here is December right here. All right. So nice candle, lots of buying. All right. Lots of buying here. And we're hoping that we get a couple more candles here, a few more candles to now break the all-time highs. All right. Now, remember, this is the all-time highs. So whatever they're talking about out there, that the markets are crashing, right? Equity markets are definitely not crashing. Okay. So if we can break this all-time high, and this is not resistance, it's just a high, we could see this market move a lot higher, similar to what happened here. All right, similar to what happened here, right, where the market kept moving higher. So we look really good to move higher, and we're definitely getting that Christmas rally. We will take a look at some of the systems and go through some of the stocks that you guys are trading. All right. Okay, so let's take a look at the individual. I want to take a look at, I'll come back to this. Okay, so as you guys know, whenever we trade, right, especially stocks, right, we always want to focus on the indexes first. All right, so for the new folks that are here, we always want to focus on the indexes first, then the sectors. So the indexes are the Dow, that's the Dow, which is here, the Dow, the S&P, the NASDAQ, and the Russell, and then also the VIX. Okay, so right here is the Dow Jones. All right, so we have a buy signal here. These green candles here, these are buyers. All right, so we've got a buy signal here, all green candles. All right, we call this the markup phase. So the Dow is definitely moving higher with a buy signal. All right. And I'll open up the floor for questions shortly. This is the S&P. So S&P has a buy signal moving higher. It's breaking resistance here, this yellow line here. All right, so that's good. So we've got 2 out of the 4 indexes with buy signals. And guess what? We finally got a buy signal today on the NASDAQ. All right, so here's the NASDAQ right here. We got a buy signal, which came in today. So that's good. So that's the 3rd index, right? And then the 4th is the Russell. All right. And here is the Russell here. It's not as popular as the NASDAQ, S&P, and Dow, but we still need to watch it. So it has a buy signal here, and it's moving nicely up the markup phase. So all 4 of the indexes are flashing buy signals. So that's good for stocks. All right, that's very good for stocks. All right. The last thing we need to look at, all right, when we look at the overall market before we start buying stocks, is the VIX volatility index. All right, so the VIX volatility index, and let me change this here 1 second here, guys. And the good news with the VIX is that it is currently, right, just got below 20. All right, just got below 20, which is good. Good for us as equity traders. Okay, so VIX is moving lower. So that's volatility. So as the VIX moves lower, we want low volatility, right? A number below 20, right? If it gets below 20, very, very bullish for stocks. All right. If it's above 20 and it's high, all right, that's bad for stocks. Okay, so this move down here, right? This move down here in stocks, when these stocks move down, right? Like here, the volatility was high. Right here, the volatility was high. So as the volatility, VIX volatility is coming down, right? Guess what? Equity market, stock market's moving up. Your stocks will more than likely move up. All right, but we needed to get below 20. So it just got below 20 today. All right, so we needed to get now in the low teens. So 14, 15, 13. Very, very bullish for stocks. Okay, so it's absolutely heading in the right direction. All right. All right. Sectors. All right. Most of the sectors are up. All right. So your home builders, right? Financials, industrials, tech, consumer staples, a lot of them are up. Biotech and energy is down, right? Those were up, right? They're now down. We'll take a closer look at those. All right. So here are the sectors right now. The top sector right now that we should be trading. All right. So we go from the index, then the sector, then the stocks. All right. And we want to do that every single time, guys, every single time. So the top sector right now, right here, that's moving higher is consumer staples. All right. The second is materials. All right. Buy signal here, it's moving higher. All right. The third is gold. Fourth is financials. All right. The fifth, industrials. All right. Nice move here in the industrials. All right. The next one, technology. Let's see. Technology is holding nicely, trying to break resistance here. We'll keep an eye on technology. Healthcare, right? Nice move in healthcare, utilities, and you guys get the idea. All right. All right, I want to see what we've got. Any questions before I move forward? Any questions on any of this? On the Dow, I know we've got some new folks here. So any questions on the indexes? Any questions on the sectors? Any questions on the VIX volatility index? Any questions at all? All right. Okay, so we're going to take a look at the stocks that we have in Heat Seeker that ran today. So Heat Seeker for Stock Boss. All right. Health, keep an eye on healthcare. So write this down, guys. Healthcare stocks. We want to keep an eye on healthcare. Right. We saw movement here in monster sectors in healthcare. Right. So here is the healthcare sector. Healthcare sector, right? See that? Those green candles, those are buyers. Red candles, those are sellers. All right. So buyers are definitely coming in. All right. So that's healthcare. And if we take a look here, you'll notice that all here, these are healthcare stocks that the big institutions are buying. Okay. So let's take a look. All right. Nice markdown phase. Green candles are setting up here. So that's one to watch. This one here is definitely moved up. That's gone already. Here's one with the buy signal right here. A bit of consolidation in here, but nice markdown phase here. All right. All right. Keep an eye on this one here. All right. Keep an eye on this one. SNDL. All right. Pretty good volume. Buy signal right here. It's moving higher and it's inexpensive. So 288. All right. Just want to go through a few of these. All right. This one here has already moved. Now, this Christmas rally started a little over a month ago, guys. A little over a month ago. So you will find some of these have moved up quite a bit. All right, here's another one here. So you guys get the idea. Okay, so pay attention. Those of you who trade using the heat seeker, pay attention to that. Technology is also Has a buy signal and moving up. Okay. This one here is a good one to watch. It's at 40 cents. All right. All right. Here is one here. Another one here. Hey, Bill. And what was that symbol we went over? I want to see how it did today. What was that symbol?
Oceaneering, OII.
OII. All right. I want to see. And that's part of energy.
Yeah, I sold those options this afternoon.
You're out of them? Okay.
Yep.
But you're still in the underlying stock?
Yep.
Okay.
I didn't scale up today though.
You didn't?
Not yet.
Okay, let's take a quick look. Oh, it broke resistance. Okay, it broke resistance for you.
Yep.
Yeah. Yeah, so did you get a pop in the options? Did they pop? Because I know the market was down. So
Yeah, this morning they started to sag a little bit, and I know tomorrow it's the end of the week, and I didn't want to be stuck holding over the weekend because I think Monday would have really been so I just decided at 3:30 this afternoon just to take what I had and sold them.
That's smart. That's smart. That's smart. Keep an eye. I know we've been talking about high 16, 80, 17. Okay. And I'm glad you're not rushed to add, because I know on the weekly time frame looks like we can get some more potential, right, to move higher. But you've got sellers here. Okay, you've got sellers definitely sitting here and here, and it's gone up quite a bit already, from here, from
So
support.
my thought on this is I want to see what Sniper Trader brings to the table tomorrow afternoon
Okay.
before I lock in too much capital on scaling up on this.
Okay.
And depending on, if it looks like I got some room, I probably will take another position before the end of the day.
Okay. Now, why you watching Sniper?
Tomorrow's Friday.
What's that?
Tomorrow's Friday.
Yeah, but why? Are you looking for Sniper as a gauge?
No, I'm waiting to see what we got for recommendations tomorrow afternoon.
Oh, okay. Okay. So you'll be looking for longs or shorts?
Tomorrow probably we'll be taking calls, right?
Yeah. So what I'm saying is, what a lot of times what you can do with Sniper, okay? So if we come up with Sniper on Friday and we 100% calls, that will give you a really good direction on where things are moving. All right. If it's like two calls and one short, and then it's mixed, but it's the potential is to the upside.
Yeah. We're hedging, right?
Yeah. And then if we got two shorts, let's say two shorts, one call, that means yeah. So if we're and I think when we get the data tomorrow for Sniper, I think it will be all longs. Okay. But that has no bearing on your trade here. But I think if you can just keep an eye, I think 17, right at 17, that might be a concern. You might get a pullback, right? You might get you might, because sellers are definitely sitting here.
Right there.
Yeah. We can even count. We can count this here, right? We can even count this where price pullback, right? It's due for a pullback. See right here where price pullback. So this area here, across here, all right, and then here, right? So if it shoots up to here, just know you definitely due for a pullback. So I would wait on on going long, unless it gets to this area here, holds, it's got to hold, hold at resistance, consolidate. We would like it to consolidate and then move higher, then you're fine. Okay, then you're fine. Otherwise, you might get a bit of a pullback. All right.
Yep.
And then we never know with these pullbacks. Hey, Ranjit, welcome. We never know with these pullbacks, how deep the pullbacks can happen, right? So the pullbacks can happen. And I'm really glad you got out of those puts. I mean, those calls. Those pullbacks can be.
Yeah, right.
Especially
getting closer to the expiration date.
Yeah. I'm so glad you got out of those, right? Yeah, protect those profits. All right. All right. Any other symbols, any other trades you guys want to take a look at? Hey, Gerald, welcome. Any other trades? Any other trades?
David, if you could you look at Disney, DIS?
DIS, yeah, let's do that. What, Bill, what sector is Disney in?
You know what? I'm not entirely sure.
Yeah. Disney. Yeah, while you look at it, let's put it up. Disney. What are you looking to do with it, Bill? If anything.
So a couple 2 weeks ago, I've gone back to the well a couple of times on this and just gotten a couple of cheap options.
Okay.
And as luck would have it, I think it was 2 weeks ago. I was holding 2 contracts, and then they replaced the CEO, and there was a huge pop overnight. And then it tanked. It tanked right away on the daily. I think it was on the 240. And
Okay.
I just wondered if you just take a look at it, and I think it's still in a markdown phase.
Okay. You don't know what sector?
I'm looking it up now.
Okay. Disney.
Transportation. No. What is this?
Let's see here. Let me see if I can find it in Bull. Let's see if it's in Bull Master.
It's a communication services.
Communication
services.
Communication.
Okay, thanks, Ranjit. Let's see. Okay, no, it's not here. Okay, so communication services. All right. Okay, so communication services is right here. So that's the sector. All right, so Bill, you got a buy signal that just came in today. All right. Yeah, so you got a buy signal that just came in today. All right. And if you guys look here, if you look here, just here, this will look very similar to Disney. So that's good news. It's still consolidating, right, Bill? So it's at 16 here. It is up, right? Up, buy signal. So early buy signal, right, to get into the markup phase. So yeah, so if you look here, so that's encouraging. Let's draw it out. Okay, so you've got really good support here. All right. Really good support right here. All right. So that's your flow here. All right. This might be a pretty good setup. If you look at it, when you first look at it, it's like, oh, I don't know. But if we do this here, look at this. Look at this. So when we put in a trend line, all right, look here. All right. So Bill, what do you see here?
Well, it looks like it could break out to the upside, right?
Mm-hmm. But what's happening here with price? What's happening with price?
So what's it starting to accumulate now?
Mm-hmm. And price is being squeezed, right?
Right, right.
Yeah.
Maybe by the end of the year. What are we? This is the daily
No.
chart, right?
Yeah, daily. All right. So here is lower highs, lower lows. We're in that markdown phase, right? And we've got pretty good support right here. All right. But most importantly, what's happening to price, right? Price is being squeezed, right? See how price is being squeezed? And currently it's right here, right? There's a candle. That's your candle right here. All right. So a couple of things that could happen, right? It can continue to consolidate tightly within here. But eventually price has to go somewhere, right? It has to break out. It can break out to the downside, break support, right? And go lower. Or it could break this trend line here and go higher. Okay. But based on the sector, based on the market, right? The sector has a buy signal, right? Market's moving higher. We have that Christmas rally going, right? Where do you think this will go?
Yeah, Michael, especially with the VIX dropping, right?
Mm-hmm. With the VIX dropping, all right, and you've got really good support. All right, so you've got really good support here. Nice downward trend line. So price has been exhausted. All right, so it fell from 180, right, to 98. This would be a good one for calls. Are you looking at calls on this one?
Yeah, I had two contracts earlier. It was actually in November. I only held them a couple of days
Okay.
because on the 240, you could see where it jumped up, it gapped up, and then all of a sudden it just didn't hold.
Okay. All right. So here's the trade here for here. Here's the trade. Here's the trade. All right. You got to wait for a green candle, right? Green candle to come in. Your buy signal will come in here, just like the previous buy signal here that failed. All right. Bought here, broke support, failed here, right? Took a small loss here, right? So this is going to be your, here's your resistance right here, Bill.
So we're not going to get a buy signal until we break the 100 mark, right?
Yep.
Right around the 100 mark.
Yep. Yep. It might come in early. I mean, it might come in here, right? It might come in here.
Okay.
But absolutely here. Okay. What you could do is, if you wanted to, you could watch it on the 240. What does it look like on the 240? Let's see here. This is a great setup, Bill. All right.
Mhm.
So yeah, so stay with it because price has to go somewhere. It's being squeezed, right? So price is being squeezed. It's being squeezed. You see here, it keeps getting, it's narrowing, right? And like I said, it might continue to do this, right? But with
Right.
everything that's going on, you could get a big candle, and it happens quickly. You could get a really big candle, right? To break out of this, right? This is just like any type of consolidation where traders, price gets exhausted, right? Price, traders will have to move, they have to break out. And you got pretty good support here. So they hold in the 92 support.
How far back is that 92 support held?
Well, let's go back and see. When you first look at it, it doesn't look like there's anything there. Okay, look at this. Look at your weekly. Bill, put a weekly together.
So that 92 looks like really good. That 90,
Long time.
92 mark, that's really
It's a very, it's a
2000.
very strong support. Yeah.
Very strong support there. Yeah.
that goes back 6 years.
2015.
7 years. Wow.
Yeah, 2015. Really good support. So you've got a really good floor there,
Mhm.
Bill. Yeah. And look at this. What a nice setup. What a beautiful setup here. Wow. That's why sometimes it's good to, really, at first when you look at these, it's like, there isn't anything there, but look, you have a really good support here. All right. Even here, previous resistance is support right here. But look here, definitely support here. Definitely support here. Absolutely here. We'll count this. We won't count this. Here. And it's holding right now. And you're right here. And look at this markdown phase. Right? Nice markdown phase. All the sellers. Right? So it fell from 200, right, on the weekly time frame, right? So we'll let someone else buy it here, right? We'll buy it here,
Mhm.
right? So absolutely, if you get a move, you'll get a move. You should get a move, right? You might consolidate a bit. That's worst case scenario. It will consolidate. I don't see it breaking. I mean, it hasn't broken support since 2015.
So this is a good example of waiting for the buy signal
Yes.
because it could consolidate forever.
Yes. Yes. Hey, Carlos, welcome. So I would recommend, I would bring out a 240,
Uh,
240
Okay.
to get in early, especially if you're looking at calls, right?
Yep.
Yeah. But if you look at every time it hits support, right? So every time it hits support, so here is support, right? So here is support, 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 oh, support. Horrible S's. It's supposed to be an S. All right. But look here. Every time it hits support, made a move higher. Hit support, made a move higher. Hit support, that 92, you're right, support, made a move higher. Hit support, made a move higher. All right. Hit support. You see this, Bill? And everyone else hit support, made a
Yeah,
move
that's a good
higher.
bounce right there.
Even here, and this is on the weekly time frame. So if you catch it on the 240 and daily, right, you'll do well. Hit support, made a move higher here. Even if you get it back to the moving average, or even if you get here, that's a pretty good move with your calls, right? If you get a move like this, that's even better, right? All right. And if the market, go ahead.
No, yeah, I'm agreeing. Yep. That's a good move.
And if the Dow, right, if the Dow continues to move higher with the rest of the indexes, right? So if the Dow here breaks, if the Dow, we're getting close to breaking resistance here, not resistance, the high. This is not resistance. There's nothing here to prevent price. There are no sellers here. right? This is we don't have any resistance here. This is just a high. So the market could definitely keep moving higher, breaking new highs. If the market makes new highs, your Disney stock here will absolutely break out. It's waiting for reasons, right, to move higher. All right, and all that selling has been done. Really good support at 92. It's at 98. We'll take that support right there. Yeah, good job. Good job watching this. All right, you could actually do the underline. I mean, it's a bit expensive for my blood. I mean, $98. But you could definitely take the underline and trade some options.
Okay.
All right, good job. Good job. Good find. Anyone else? Any other symbols you guys want to take a look at? Any other symbols?
Hey, David, just a
Here,
quick
Andrew.
question.
Okay.
So you mainly look into the price action, right? So you have this moving average turned on. So what do you generally look onto that?
Okay. So,
And
Andrew,
the second question is that you
repeat
always see the sorry.
repeat the first question for me, please.
Okay, so you mainly look the price action, right? So I see you have this moving average turned on. So what do you generally see in that moving average, and how do you interpret? Like how do you, like, you have those moving average, right? Red and green. So what do you see in that? And the second one is that you always see this sector. So like how do we like I never looked into sector. So is that like what is the symbol for those sector, or how do we find those sector?
Okay. All right. Okay. All right. So moving averages and the sectors. Okay. Okay. All right. Okay. Um, before Ranjit, before we do that, I want to show something here. This is the monthly on Disney. So Bill, look here. This is the monthly on Disney. Okay. This is the monthly here. You see what's setting up here? So this is the monthly here. All right. So really good support here. Really good support. All right. So all you need is a pop. Okay.
Yep.
Okay. So Ranjit, the moving average is just for separation. Now when we look at everything, right? We look at everything as a whole, right? It's not just one thing. All right. So if we go back here, we'll go back. Let's see. We'll go back to the weekly because it will show it a lot clearer. Okay, so we have support and resistance. That's important, right? Support and resistance, right? We know we have the red candles. So those are sellers. Green candles, those are buyers. Okay. You have our buy signals, sell signals, and so forth. The moving averages, right? Think of the moving averages as just separation. It's just to visually separate the buyers from the sellers. All right. Now there are different ways that traders use the moving averages, right? And there are wider moving averages that you can use. All right. We use a simple moving average. All right. And the goal is to separate the buyers from the sellers. Okay. So think of your moving average here. And guys, this is your moving average. What he's referring to, Ranjit, is this line here, this green line and this red line here. That's the moving average. All right. And there are different inputs you can do, different calculations. You can open up, like I said, you can, a very popular moving average that you guys will hear out there is a 50-day moving average. It's very popular with traders. A 200-day moving average. So a 200-day moving average and even a 100-day moving average. Those are popular. We don't use that. We use, I believe we've got like a 22 moving average and a 20. It's a small moving average. And all we're looking for is separation. All we're looking for is separation like this. Okay. And what we want to do is we want to separate the buyers from the sellers. So think of this as your road, a road, right? A road or sidewalk. All right. And on the left side of your sidewalk are buyers. All right. Buyers, green candles. All these are green candles. On the left side of the road, right? On the other side, right here, those are sellers. So all we're doing with
is that like your red is 200 and green is 50?
What's that?
The red is 200 and green is 50 moving average.
No, they're different. They're different numbers. They're a lot smaller. They're like 17, 20, very small, very small. 50 would be a lot wider. Okay. So let's do this. So you guys could visually, let's see here. Studies. But the idea is use the way we use the moving average is just to separate the buyers, to visually separate the buyers from the sellers. All right, so we'll do. All right, so here is a moving average line right here. So Ranjit, if we did a 50-day moving average, and this is a blue line right here, here is a 50-day moving average. Okay, you see how far that 50-day moving average is from the price? Hold on. So when you guys look at indicators, and that's why we keep everything simple, right? When you look at indicators, there has to be a purpose for it, right? No, we don't just randomly put it on the chart. So if we did this, and that's a good question. We don't talk about the moving averages a lot, right? So here is this moving average right here, right? Green moving average following the buyers. Here is a 50-day moving average. You see how far, Ranjit? You see how far this moving average is from the price? Right? It's not hugging it anymore, right? It's far away, right? From the price, from the buyers, and then from the sellers, this red line right here. See how it's hugging, right? See how it's hugging the price, the candles as it moves lower? That's what we want, right? If we did a 50-day moving average, you see how far that 50-day would be? And if we did like a 100-day moving average, it would bring it even further out.
Yeah, so it looks like that is a support and resistance continuous line for the buyer and seller, right?
Yes. So yes. So it can act absolutely work as support and resistance. Okay. But it's not a replacement of support and resistance. Okay. So a lot of traders will get in trouble because you might, if you use it, if you use your moving average as, so here is support. Here is where we got the sell signal to get out. The price broke through, so it's no longer in the road, right? The road isn't clear anymore, right? You see where the road is all, I call this the road. You see how it's all clear right now? It's all clear. We good to go, right? We good to go. Buyers are in control. Price is moving higher. Once the price gets within the road here, right? Within here, then guess what? That's where you're going to find consolidation. So your accumulation phase, your distribution phase, all right, that will happen. A lot of times it will happen when price crosses the moving average. Okay, so like in here,
Perfect. And that's a good example. Perfect. I never thought that. So what is that green and red line number of days you set up? Like 9 days and 5 days, or what is that?
I don't even. We have it.
But so it's looks so close, and like the 50-day moving average was so off, right?
Yeah,
Your
it's not.
red and green is so close to the red and green
Yeah,
candle.
we have it where it's like a 34. Yeah, 34. But the point is that if you it's easy to see, and I tell traders to do this. This is the way we want to use it. All right? We want to keep it simple. All right? Right? Use the KISS method. You guys have heard of the KISS method? All right. All right. So, all right. If the price is above the green line moving average, buyers are in control. Simple. Price is above the green line, buyers are in control. All right. Or the moving average, it's above the moving average, buyers are in control. If it's below the moving average, the red moving average here, sellers are in control. That's it. All right. If it's between, if price is between the moving average, like here, right? What will happen is you'll have mixed. If you notice here, all red candles, buyers are in control. As soon as that candle gets within that moving average, and think of it as a road, right? That will help you guys, right? Then that candle will change. So you don't have any direction anymore. The sellers are not really, they don't have as much control, right? Like here, if you guys look here, right? We've got white candles, green candles, red candles, right? That means we're going to have a possible change in direction. And it's, guess what? It's all prices all within the moving average. So like Collis had her trade last night, right? The New Zealand, right? Collis, which one was it? No, New Zealand dollar and Aussie dollar, right?
Correct.
Yeah. So with her trade, guess what? That's why I told her, hey, there's nothing to worry about, because she had all green candles, right? And they were right along the moving average, right? Once we get white candles, right? Red candles, that's when we start getting in this area here. So it really will give you some comfort to stay in the trade, right? When the price is above the moving average like this. And green, if you're going short, all right, or in the markdown phase, red candles, all right. And the goal is we want that price to stay, right? We do not want it to get within that moving average, within this area in here. And that's the purpose. There are other uses for it, All right. But that's what it can get very complicated, but that's what we use it for, just to separate the buyers and the sellers. And that's what's important. The important is to know when to buy, when the buyers are in control, and then when the sellers are in control, and then when there is no decision at all, which is here. All right. Does that help, Ranjit?
No, definitely. This is the best understanding. This is really good. So I'm still trying to understand, like, your green and red, right?
Mm-hmm.
So green is 32 and red is what? So I just want to understand. It's so close. So there should be two different moving average, right? Or is the same
Yeah.
moving average?
It's different, but I don't, hold on one second. I don't even think we have it where we can.
So is that the same setup for every stock and every graph,
For
or you change it?
for our systems, yes. Yes.
Okay.
Yeah, for our
No,
systems.
definitely. So this really makes sense, like this, as you're saying, a kind of an analogy. Just consider as a sidewalk. If that car comes into the sidewalk, so it's kind of a
Yeah.
danger. Yeah, it's a
Yeah.
danger. So if it is away from that and you can walk through, so it's just a gives a comfort and a factor of safety. Okay, you're safe. Yeah,
Yeah.
that
Yeah.
makes sense.
Yeah. So we have it at 34. So I would say 30. You can play with it. 30, 34. You could do probably a 34, like 18, 20. Okay. But you can. Now the sectors. How do you find the sectors? Okay. How do you find the sectors? Well, you have to go online. All right. If you don't have a process like this, you can go online and do a search for the sectors. Okay. I'd mentioned, if you guys, if you want to, a lot of systems out there, well, trading sites don't have your charting like this, but you could go to like a trading view. All right. I mean, we make it really easy here, right? But you could go to trading view, and then you can pull up the sectors here. So here are the different sectors here. All right. So XLP, okay. XLP is for consumer staples. Okay. XLB, all right, is for materials. All right. Financials, XLX, but you can do that. You can go online, pull up symbols for sectors, okay, Ranjit, and they will come up, okay, and then you can put it
So
like
so is this a ETF, or what is this? When you say
it's
sector,
it's an ETF. It's an ETF.
is the ETF of all the stocks in that sector?
All the all the
Done
sectors.
on its recording. Okay.
Yeah,
Okay.
all the sectors, right? And then within the sectors, you have the stocks. Okay, so if we go here, and this is good information to know, right? So if we go here, right? If we go here, so these are the sectors, all right? So these are the sectors here, like healthcare, right? Like we'll pick on healthcare. So these are the sectors here, healthcare. This is the exchange, so the NASDAQ. And then within the sector, here's the industry, right? So healthcare, and within the healthcare sector, there's biotech, all right, biotech. And then there is one here that's part of healthcare, and it's healthcare. What is this? Let's see here. Healthcare facilities. Yeah, healthcare facilities. And then here's another healthcare facilities. Okay, so within the sectors, you have the exchange, right? You have the sector, here's technology, and then you have the industry. So technology, right? So the NASDAQ. So we want to pay attention to the NASDAQ. NASDAQ just gave a buy signal today. All right. And then here are the stocks. Here are the stocks within the sector. All right, that's the sector. And then here is the industry. All right, but our main focus is on the sector. We're not too concerned about the industry, right? But we have to get this the sector right. So the index sector, all right, and I mean, if you want to be more specific, all right, like software and programming, computer services, you can get more specific. But that's the real concern. The work that we have to do is finding the right sector. Okay, just like Bill did, right? With Disney, right? So that sector gave a buy signal. So if that sector has a buy signal, Ranjit, all right, then that's a green light for his stocks. Now he still needs a buy signal, right? We need a break of resistance. We still need a buy signal on the individual stocks. But those stocks, right, they make up the sector. So they make up the sectors, okay? All right. Does that help?
Yeah, absolutely. Yeah, that's a good explanation. Thank you so much.
Yeah. So we have to go through. We have to track. And before we buy any stocks, before we buy a single stock, imagine, right? Imagine, right? We don't have buy signals, right? It's in the markdown phase, like here. So, right, price is red, right? Candles are red, below the red moving average, and we are buying stocks, right? And then the sector is doing the same thing, and we're buying stocks, right? The likelihood that your stock will go up during the markdown phase when sellers are in control is very unlikely. That your stock will be one of the few stocks that will go up when the rest of the market is moving lower. All right. So a large percentage of stocks will follow the broad indexes. All right. So a good percentage. So 90%, 95%, all right, a large percentage will follow the direction here and then the direction of your sectors here. That's why this is critical. Now, you could have like Bill did, right, with his stock, right, when he got into that stock, that oil stock, right, energy stock, at that time, right, it was the only sector that was moving higher, right? So out of all of these sectors here, out of all of the stocks, and we track 22,000 stocks daily, right? Only one sector, energy, that was moving higher, right, Bill?
Yep, how's that?
Yeah, yeah. And everything else we're moving lower, right? So we want to be on the right side, right? So we want to be on this side if we're buying, right? Above the green moving average here, if we're buying. And we've color coded this to make it simple, right? Red candles, red moving average, right? Markdown phase, we should not be buying. All right. Price breaks resistance, right? Green candles, we should buy. If sellers come back into the market, we have to get out because the price could, right, keep going lower. And then we'll just wait for an opportunity to buy again. All right. All right. Any other symbols? Any other questions before we leave? Any other symbols? Any other questions? Good questions, Ranjit. You always have good questions. Anyone else?
Hello, David.
Yes.
Can you
Hey,
hear me?
Dennis. Hey.
Hi there. Yeah,
Hi.
David, got a good question here. When do you determine which moving average to use, whether it be the 50, 100, or the 200, when you kind of create a graph, you know, a trend?
Boy, I tell you, I'm going to show you guys this. It depends on what you want to accomplish, right? It really does. It really depends on what you want to accomplish. When we use moving averages, like I said, right? We just want it for separation. For every chart that we do, we just want separation from the buyers and sellers. Okay, that's all. Now, there are traders. You'll find a lot of what you hear on CNBC. And other traders out there, they'll do this, just to give you an example. And you guys have to play, you can play with the moving averages to find out how you want to use it. We use it just for separation. Some traders, especially some of the hedge funds, like I said, what you'll hear on CNBC, they will use a longer moving average like this. And what they'll do, they'll use it for market turns. Okay, so let me show you guys this, and then we'll be done. All right. And Dennis, welcome. This is your first time, right?
Yeah, first time. Yes,
yeah.
indeed.
Yeah, welcome.
Enjoyed the
welcome.
training. Excellent.
Oh,
okay.
Perfect. Welcome. All right. All right, let's do this. Keep coming, Dennis. We do these classes every evening, Sundays through Thursdays.
Okay.
Same time, same time.
Okay.
Yeah.
I will be tuned in.
All right. So here's an example of a 200-day moving average. And this is popular, 200-day moving average, and also the 50-day moving average. All right. So this is a daily time frame, right? Daily time frame. And this is what you guys will see, right? And this is a regular chart, right? No buy and sell signals, no support and resistance lines, right? The candles are not color coded. So, right, you can't tell where the buyers, right, where the buyers are, the sellers are. It's all kind of mixed. That's what you will normally see. And what's popular out there is a 200-day moving average. And what a lot of the big traders, big investors, big institutions will use and they'll use it the same way. All right, they'll use it on a daily time frame. And what they're hoping for, if the price stays above the moving average, they'll keep buying. So every time the price hits that moving average or gets close to it, they'll buy. Okay. All right, they'll buy. Once the price breaks that moving average, right? So it breaks that moving average here, they will, normally they don't close all their positions, they'll just stop buying. Okay, so that's usually a buy and hold concept. Okay. Sometimes they will sell, but this is their road here. So they'll use just a one. You remember we use two, right? We use two moving averages, right? They will use normally one, right? And so they'll use it as this is their road, and they will just as long as the price stays above the moving average, right? If it falls below the moving average, they might stop, just hold. If the price gets back above the moving average, they'll continue to buy. And every time it does this, right, that's an opportunity to buy. It's like a support, Ranjit mentioned, right? It's like a support, all right? It's like a support, okay? So and that's a 200-day moving average here. That's a 200-day moving average, okay? Okay, so there are different ways to use it, right? We get closer to the price and we do two moving averages, two close moving averages, and for separation. So there are different ways to use it. It's very versatile. It works well, but No, you have to know what you're using it for. Okay.
Okay. Okay. Sounds good. Thank you.
Very good. Very good. Very good. All right, guys. Thanks. Good class. I want you guys, those of you that are new here, please come back, right? Please come back. Like I said, we do these classes every evening, Sundays through Thursdays. We do different classes. We do have a beginner's class. So on Tuesdays, we have a beginner's class. All right. But keep an eye on here on the Dow. All right. We'll watch the Dow. We are in this Christmas rally. All right. So we are looking for stocks to do really, really well. All right. And possibly break this all-time high here. And looks like that could happen soon. All right. All right, guys. Take care. Thanks for coming, everyone. Have a good evening.
Thank you.
And I'll see you guys on Sunday. See you on Sunday. All right.
Okay. Thank you.
Thanks, guys. Take care. Bye-bye.